Hey everybody, this is Robert Keens with goldsilverpros.com. I'm back on a Friday, February 18th with my good friend Andy Schectman from Miles Franklin to talk all of the crazy crap that is going on in the world. I think that's how Andy phrased it, although he did use a little bit of a different word before we got on the recording. Lots of crazy stuff, Andy. $1,900 gold yesterday. I put this all over Twitter. Third time in human history that it's stuck above 1,900 for a daily close. I think we ended at something like 1902. That's pretty damn historic, and it looks like we've broken out this 18-month consolidation of gold. What's your view on that, Andy? Or have we broken out, or should we be a little bit skeptical of this move in gold?
Well, you know, from a technical standpoint, Rob, that long consolidation pattern looks mighty familiar to a cup and handle formation. And if you look at the rising wedge pattern that we've seen over the last several months, a breakout, which it just did, is something from a technical standpoint that certainly looks legitimate. And when you realize the pickle that the Federal Reserve is in and the massive amount of money creation, I think inflation being on everyone's radar now more than the virus, yeah, I think it certainly is legit. But, you know, the little boy that cries wolf in me knows that the powers that be realize that rising gold is the canary in the gold mine and will do what they can to mitigate it. Much like 1800 that we saw over this consolidation pattern, round numbers seem to be a fixation for the cartel. And it was interesting to me that through the consolidation, every time they would hit it below 18, there were buyers that came in and pushed it back above 1800. Now, to me, that signifies strong hands, big money, buying on all of the dips. And when you see it bust out of technical formations, even though I am a big believer in technical analysis being muted in a manipulated market, there is something to be said for breaking out of long-term patterns, breaking out of a rising wedge formation, breaking through moving averages, in this environment that most of us, I know you, even though we've never had the discussion, I think would believe that gold should be much higher as it is and should have been a long time ago. So yeah, I do think it's real. I also think there's a possibility that even though it's real, you know, the manipulation on COMEX is real as well. And they will do what they can to you know, to mute gold's rise, ascent, especially above these key round numbers, and because it signifies a whole lot more than just inflation. It signifies to me massive de-dollarization. It signifies to me weakness, ultimately, in the world reserve currency. And the biggest money is always ahead of the curve. The biggest money always makes a move before the public catches on. And so, yeah, you know what, Rob, I do think it's real. And I also think, even though it's real, that there's a possibility we all may be disappointed on Monday and see the price a little bit lower. But ultimately, this trend is in motion. And where we are in the cycle on many levels, politically, economically, morally, socially, geopolitically, you name it, speak to higher gold here in 2022.
Yeah. I agree with you there, and I do think that the market is starting to win a little bit against the people that are shorting. Of course, we know it's the big foreign bullion banks. Nick Laird at Gold Charts R Us has been charting this for a long time, and the data is there. What's interesting, Andy, is in silver on the COT report, the bullion banks, which are usually the biggest short, a few weeks ago actually went net long in silver, which is pretty shocking because that almost never happens. Now they are, I think, as of the last COT report I saw last week, a little bit net short still in silver, but they've almost gone to like an even position, which to me is incredibly bullish. And they're also reducing their shorts on COMEX and gold as well, although they got a longer way to go for gold. It almost seems as though the banks kind of know what's coming. They're reading the tea leaves of the economy, and they're saying, you know what, the Fed's about to get really aggressive here. And that tends to be bullish for gold. So I do think they may be reversing their position. We've got a little ways to go, but I think we may be getting there. And I think you're right. I think the winds are all blowing in favor of gold and silver this year. What are your thoughts on that?
What I think is that you should be writing for mainstream publications. I know you used to write for, what was the name of that mainstream article you wrote a lot
Seeking
for?
Alpha.
Yeah, Seeking Alpha. You know, we need someone like you to get out there and let the public know what's going on, because when you listen to the talking heads, they'll say an aggressive monetary policy by the Fed raising rates is negative for gold. And, you know, if we talk Paul Volcker, a Volcker moment, yeah, raising rates above the rate of inflation would be negative for gold. And just like it was in 1980 when Volcker raised rates almost to 20%, which not only killed inflation, but killed the gold bull market as well. And when we talk about the Fed raising rates to 2% in the grand scheme of things, backed against the 7.5% CPI tick that is understated maybe by half, is spitting in the ocean. Because even, you know, the argument is gold, the reason, well, the term in economics is Gibson's paradox, which speaks to the inverse relationship between real interest rates, not nominal, real interest rates, and the price of gold. And when you raise the nominal Fed funds rate to 2%, and you factor a 10% or a 10-year treasury at over 2%, or 3%, or even 4%, you're still real negative. And so, you know, by several percent. And so gold's run, I think, has, at least in terms of what the Fed intends to do, has a long way to go, because long before they could ever normalize the economy with interest rates that somehow find an equilibrium with inflation and the economy, you will absolutely crush the market. So I do think you're right. These rates, I think, rising to 2% is signaling desperation by the Fed, backed into a corner, and I ultimately think shines a light on just how important gold and silver are. And I do completely agree with you, disagreeing with the talking heads that say raising rates to 2% is a detriment to gold. I laughed, and think it's actually quite the opposite. I think a Federal Reserve that would try and raise rates 800 basis points above the rate of the CPI inflation of 7.5, long before that they would ever get to that point, we would be in the greatest depression of all time and collapse the stock market, the bond market, and the real estate market. So yeah, I am completely in agreement with you.
Yeah, and the point that you made about real negative interest rates, it's the real rate, not the nominal one. So even though interest rates may be above zero, you got to subtract inflation from it, and that gives you your actual real return on your money. And gold always does well when you have negative real interest rates. And you know, even if you take the CPI number at 7.5% or whatever, minus 1.5 on bonds right now, close to 2, you've got negative real interest rates. And again, like you mentioned, if you look at real inflation, Shadow Stats tracks that. It's 14%, John Williams has it. So you're really in negative real interest rates. And so, yeah, anything the Fed does until they get up to about 10 to 14% shouldn't really consider that any detriment to gold. And I would point out one thing I did in my book in chapter 2, for those that have read it, I looked at gold prices over like a 200-year time frame. And the thing about gold is it does well in deflationary environments because it helps savers. It just does exceptionally well in inflationary environments. So even if the Fed gets interest rates above the real rate of inflation for a small period of time, I don't think that's necessarily detrimental to gold either, because I think you're still going to get that value in gold over time for the natural inflation that you're going to have in the monetary supply. Because I guarantee you the Fed is not going to raise interest rates and then stop printing a bunch of money forever. So I think in either case, it looks positive for gold. You had a comment before we started recording about Bullard. I believe he might be the St. Louis Fed president, was doubling down, you know, in your words, on how aggressive they should be at raising interest rates. Perhaps you can educate us as to what he said the latest.
Yeah, it was yesterday in Reuters. He came out and said that the Federal Reserve should implement a full percentage point rate increase over its next 3 meetings between now and I think the end of June. And you know, reiterating his call for strong Fed action against high inflation, meaning he's talking about, of course, stopping asset purchases altogether, and in fact, selling, I believe the number was $50 billion a month in quantitative tightening, selling off assets. And it's interesting, if you read between the lines, you have him saying this, you have Fed Chairman Powell coming out and more or less echoing the same thing, but saying it in a manner that he said, look, we want to only carry U.S. Treasuries on the balance sheet. Well, they have $2.9 trillion of mortgage-backed securities on the balance sheet. And when you look at what has already been a 40 basis point rise in the 10-year Treasury before the Fed does anything, in fact, they're still buying mortgage-backed securities. They're still buying Treasuries right now. And with knowing where we're heading and seeing the rates rise, we've already seen a 10% reduction in new housing starts. And as we've talked about before, you know, 1% rise in interest rates often correlates with a 10% decrease in home values. So as we're seeing a slowing of the economy, a slowing of new housing starts, and the likelihood of raising rates and dumping a balance sheet that is loaded with $3 trillion nearly in mortgage-backed securities, I think spells serious problems for a real estate market at all-time highs. And so I think that if we see this, it's going to get very interesting, and it may very well start in the housing market. And I do believe that the Fed has no choice but to follow some semblance of what Bullard is talking about, because if they don't, they lose their credibility. When you come out publicly, all of them, and say we need to get tough on inflation, and we're going to, and you don't, and you double down the other way, as most people think they will, I think you've lost all credibility. And when that happens, that's when things get really crazy, because I think when that happens, you end up seeing a tidal wave of bond sellers, and they're going to see inflation running at 15%, maybe 20% down the road, whatever it is, with bonds yielding only 2 or 3%. And then you got the pension funds and the insurance companies and the money managers who will freak out, and they'll start dumping them. And that's when the bond market, I think, which is bigger than the Fed's ability to contain it, takes over. And so the pickle that they are caught in is that if they don't follow through with getting tough on inflation, and in essence, really disturbing the markets, I think at some point the Fed is rendered neutered and obsolete, because the bond traders will sense that they are trapped. And as inflation starts to rise, with bond yields not rising, at some point they're all going to flee before it collapses. And that's when things overnight become crazy. That's when you start to see gating of money markets. That's when you see, just like in 2009, when there was a bill that made it all the way down to the House floor to take IRAs and put them into somewhat of like an annuity backed by U.S. Treasuries to stabilize a falling Treasury market, to stabilize the interstate market. That's when those kinds of things start to happen. That's when bail-ins and bank runs happen. That's when the shit really starts to hit the fan. So yeah, I think that we are at a seminal point in history where, you know, for all of our lives, you and me, you know, I was 10 years old in 1980 when inflation was roaring. I don't remember that. But nonetheless, in all of our adult lives, we've never had to worry about inflation quite the way we are now. And when you realize that, I just saw a poll on Fox News this morning that 55% of Americans are concerned that 65% of Americans are living paycheck to paycheck. What you have got right now is a massive dichotomy between those who got something and those who ain't got nothing. And in other words, people, the majority of this country is living paycheck to paycheck in an environment where the cost of living is rising exponentially, and the wealthy at the same time have been massively enriched by this inflationary agenda. So, you know, you have social problems at the same time that potentially could exacerbate the problem. And I think that's something that people really aren't thinking too much about, but we've created such distortions in the real economy that that's something I'm concerned about as well, if and when the Fed starts to, as they say, get tough on inflation. What's going to happen to the social fabric when markets start to collapse and you have chaos on many different levels?
Yeah, I agree with you. Basically, everything you said, it's a good read of the market and a good read of probably what's going to happen. I think, Andy, you had another update for us on the repo market. You saw something breaking there. What news do you have?
Well, it's less the repo market and more information from the repo market guru 𝙂𝙊𝙇𝘿, who used to work for the New York Fed. And if you go back to 2019 and Google his name, you'll find article after article after article exposing what was happening in the repo market. And really, he writes like an economist. He writes like the Fed chairman speaks at a congressional hearing, and it's very difficult to articulate what he's saying. But if I had to paraphrase what he was saying, he basically was saying that it seems socially, anyways, acceptable these days, to live on the dole, to live on government subsidies, and that the ability to consume or the ability to survive without producing anything has become kind of a semblance of how clever you are. And that when you look at the labor participation rate at all-time lows, and you see all of the money that's out there chasing fewer things because fewer things are being produced, he views that as a very big problem. And basically what he was talking about was he believes that, and again, this is a guy that used to work for the Fed, he believes that the Fed needs to crash the markets. They need to crash the markets to shock people back into producing, shock people back into the realization that nothing is for free in life, nothing goes straight up, that the Bitcoin millionaires and the people who are trying to retire early because their 401ks have gone up threefold, their house has doubled or tripled in value, think that, hey, it's a great environment where, sorry about that, it's a great environment where we don't have to work. And I think that there is some truth to that. And so what he's talking about, that the Fed has no choice but really to crash the markets, and to do so by do exactly what Bullard says, by expediting the deleveraging of the $9 trillion balance sheet that was $800 billion in 2008, by raising rates faster and more frequently than the market believes will be done, in order to kind of get people back, shake them a little bit back into realizing that that a country that doesn't produce anything ultimately is in big trouble when times get tough, and that the Fed, because they're caught in such a pickle, needs to wake people back up, and the only way to do that is to crash the markets. And I found it interesting that he didn't just single out the equity markets. He also spoke to Bitcoin and cryptocurrencies as something that he believed the Feds needed to kind of make an awakening to the whole slew, the whole generation of people who believe that the road to retirement is paved with cryptocurrency and not with hard work. And I found it very interesting that you hear Fed Chairman Powell saying that they need to do this in an expeditious fashion. You see Bullard from the St. Louis Fed saying that they need to do it in a more expedient fashion and more aggressively. You see 𝙂𝙊𝙇𝘿, who used to work for the New York Fed, saying the exact same thing. And yet you keep hearing, as a side note, talks about cyber attacks everywhere. A client of mine owns a bank and tells me that they're on high alert for cyber attacks. And that dovetails with what we talked about before, the meeting between 11 countries and the Treasury Department, the World Bank, the IMF, the BIS, the same group of people that had a meeting in 2019 about pandemics, specifically about coronavirus pandemics. Now this
that could not possibly be a coincidence, Andy.
Yeah, well, now this same group just met a month or two ago in Israel about a global cyber attack. And when asked publicly, Mr. Powell, what is the biggest threat to the financial system? His answer was a cyber attack. So something to shock the public into realizing that what we have been living through is an anomaly. It is a period of time, perhaps unlike any other, and probably will never be anything like it ever again, where, you know, where a $10,000 investment in Bitcoin has made people tens of millions of dollars. And I think that's something that has created apathy, certainly in the labor markets, where you have to pay a signing bonus and $19 an hour to get people to come work at a fast food restaurant. This is a problem. We are becoming very unproductive. Costs are rising, and the market is at a crossroad where the Fed has to do something about it. So if they shake this tree hard enough and freak everyone out into realizing that what they thought was easy street ain't so easy anymore, maybe get people back into the labor market, get people thinking differently, try to be more productive, because as it is, we have free money being thrown at people out of helicopters who are unproductive, who are living on the dole and think they're very clever by getting government subsidies or by being lucky enough to buy Dogecoin at a fraction of a penny and making enough money to never work again. Hey, great. But, much like most people who've ever invested, there are very few Mark Cubans out there who sold at the right time. And most people will ride this up and ride it right back down. The question is, if we see this type of an event, whether it be aggressive Fed tightening or raising rates aggressively enough to rattle the markets, or God forbid, a major cyber attack, and you see a plummeting of the market, how fast does that shock people back into thinking a little bit differently about life? And I think that's what 𝙁𝙍𝙊𝙎 is getting at, because this is kind of door number 3, where, the question then being, if they do this, if they do shock and awe, do they follow through? Is it the beginning of the Great Reset? Do they follow through and let everything collapse? Or do they come back in the way most people think, the way that Vegas would say, is betting that after that event, they reverse course, so they don't have to go nominally negative as the world reserve currency, giving them wiggle room? Do they come back in on a white horse, double down their efforts to stimulate the economy, to flood it with more money, to ease interest rates, and we're right back where we started? That is the question. Question is, do they follow through? And is this the beginning of the Great Reset? Or is it just a head fake, jawboning, and more of the same? That's the one part that I find really interesting, because if you talk about opportunities to do the reset, well, on one hand, I don't think the Federal Reserve and the big banks want to collapse the markets and the real estate markets and everything. But on the other hand, if the powers that be realize we're so far down the rabbit hole and that the options left to us are poor and poorer, well, you never know. Maybe they choose door 3 and they open up the gates of hell and let it cleanse itself. In Austrian economics, that's more or less, they say, what has to happen after a massive credit expansion. You have to have that massive credit contraction. You have to cleanse the system. You have to pick up the monopoly board and throw it in the air and start over. And is that something that we're going to see? I don't know, Rob. I really don't. But I'm beginning to think more and more that it's possible, when I never in the back of my mind would have ever thought it was even possible. Just rhetoric, just discussion. Now it seems to me like, hey, maybe there is something to this. So this is why I buy gold and silver. It's not to get rich. It's because I'm very concerned about what the future holds. For my son, who's graduating from the University of Michigan School of Business this year and taking a job in Manhattan. For my daughter, who's heading off to college right now, what does the future hold for them? What does the workforce look like for them? What does the economy look like for them? And I think these are real concerns that one day, one way or another, people are going to start to think about, because just like your best buddy owning a bar down at the end of the street, and you always go and say, hey, he's my friend, put it on my tab. At some point, your buddy says, time to pay up. You got to pay the tab. And we will have to pay the tab one way or the other. And I just wonder if this is the beginning of that moment where the check is thrown on the bar and saying, time to ante up. So I don't know. I guess that's what 𝙁𝙍𝙊𝙎 is basically saying, is that if we don't shock and awe the markets and get people back into thinking the way that we used to, that productivity and savings is what makes a strong economy, not speculation, debt, and investing in speculative, really speculative, high valuation investments, thinking that's the road to retirement, that ultimately we're in big trouble when that check is thrown at the bar.
Yeah, very well said, Andy. I wanted to take a minute to throw in my 2 cents around cybersecurity, which is one of the points you brought up there before we get to my last question. I have been involved in cybersecurity. I do have a master's in the field and was doing a lot of it for the telecom space, a Fortune 15 company, as well as doing it some of the consulting space for a long time. And there's always been cyber attacks on banks, in that was probably the industry vertical that gets hit the hardest, because think about it, they have access to capital markets, and that's the first thing you're going to go after. If you want to go after customer accounts, or you want to go after information, or you want to go after accounts that you can hold ransom to and get money from, or you just want to know what the banks are doing with their strategy, that information in itself, their strategy to the market, is extremely valuable, because they have analysts looking at the market, and it may allow you to front run, some of the things that are going on. So the banks have always been hit really hard, and they've hardened their defenses as much as they can along the way. I do think, even though that's always been there, the fact that, as you mentioned, it's being covered by the World Economic Forum, and a bunch of companies are doing like cyber war games to try to prepare for this, means it's a formal recognition that even though the threat's been there for a while, the game has stepped up from a cyber attack perspective, and it's being used in really a real world war. And I go back to when I was in Vegas for Black Hat 6 or 7 years ago, which is one of the premier, cybersecurity conferences in the US. And I believe it was McAfee and Intel that had collaborated on putting together a map of global cybersecurity attacks. And it literally looked like a missile map. There were millions of lines drawn from country to country, but it looked like we were shooting missiles at each other. What wasn't really, it was just cyber attacks. And that's an area really, people, Andy, people need to prepare for. If you've got a bank account and your bank shuts down due to cyber attack, where are you going to get your cash? Really, I would implore people to look at the fact that you as an individual can't do anything about this. You can demand that your banks and financial institutions are doing the utmost to protect your information. But at the end of the day, if China wants to get it, they're going to get it, right? So going sort of offline with some of your investing, like gold and silver, is a great idea, because if that banking system gets attacked and your account gets erased, or you can't, your bank's on a holiday, they're not open because they're dealing with a lot of this stuff, what are you going to do? So much of our reliance nowadays is on technology, that debit card we have in our pocket where we think we can always get cash. But this system, speaking for somebody who's worked in cybersecurity like I have, as long as I have, our technical systems, the internet is extremely fragile. And, if somebody really wants to take something down, they can. And I'm glad you brought up that point. It's such a good one to make that we don't talk about enough. And that's where something like gold and silver can really kind of save your bacon. I don't know if you had any thoughts on that.
Yeah, I mean, look, one of the reasons that I have resisted being an online platform, although I have acquiesced and we are building a new website, it's taken a long time. The back end of it is basically done. We're now tackling the front end, which we hope to have done in the next few months. When we had our store open a few years ago, were confronted with nonstop hacking attempts, and I'm sure every precious metals company in this country is, and to this day we still are. They, most of them through emails and email phishing, and it's real. I mean, it's every single day. We have all sorts of protocol in place, and cyber threat companies that work with us to help mitigate the potential for this. But as a business owner, I can tell you it is non-stop. And, a precious metal, if it's bad for the banks, you can imagine what it is for precious metals companies who are doing hundreds of millions of dollars in business a year, not trillions or multi-billions, like the big commercial banks who have, $50 million to throw at cybersecurity. companies like mine don't. And it's a nonstop being vigilant, being on high alert, always being leery and skeptical of emails that we receive. It's the real deal. And in a world that is becoming increasingly digital, if anyone knows, it's you, just how advanced the hackers are. And I will tell you that, I mean, I've seen things that will blow your mind, ranging from quick claim deed sale on a house that was never for sale, stolen identity, and the notary and the title company missed it, and $575,000 was wired to us in someone else's name, and never even had their house up for sale to begin with.
Goodness gracious.
We met with the FBI after that, and what we're told specifically, this is an Eastern European state-sponsored pandemic, that it is, or epidemic rather, not a pandemic, epidemic, that it's everywhere, that they are constantly dealing with very advanced, sophisticated hacking. And so in a world where everything from our bank accounts to our home security to everything we do now on our cell phone and digitized, I think having gold and silver in a form of analog savings off the grid, if you will, has never been more important. And I'll tell you, when you see a group that 2 months before the pandemic was doing a conference on this very same thing, and now they're doing it on cybersecurity, and Fed chairman tells you it's the biggest threat to the economy, I think that it almost seems like we're being set up or preconditioned for something like that coming. And if you follow what Pulsar was saying, basically what he's saying is that the volatility is the best policeman of risk appetite. And if you throw volatility, and in particular something like that, where the internet goes dark for a period of time, where crypto exchanges are hacked or go dark, I think people's appetite for risk and speculation immediately is curtailed and contained. And I think that's what they're getting at here, is that as much as the Fed is to blame for the speculation, for sowing the seeds of the speculation, and kind of like across the street from me here in Florida is one of the biggest money managers in Southern Florida, and I went out to dinner with him, and I was more curious about him and what he had to say than talking about precious metals. And I asked him about his concern about interest rates and inflation. And more or less what he said to me is that, hey, I'll do what I always did. If the market collapses, I'll double down, because that's what I've done now for the past 12 years, and every time it's worked. The Fed has incentivized this type of rampant speculation where you have margin debt at all-time highs, and successful hedge fund traders who manage over $1 billion saying, if the market craps the bed, I'll double down. That is the speculative risk-taking appetite that I think Zoltan is saying has to end if we ever want to find our way out of this mess. So I would say to you, just from all of the chirping, I would say there's, if I were a betting man, a better chance than not that we do see some sort of a global hacking event, and I think it's coming. So another reason to get out of the matrix and put a little money away in historical wealth, and because I think, as the Chinese say, may you live in interesting times. These are quite interesting, my friend. That's a Chinese curse, by the way. So I think these are anything but dull and complacent.
Oh yeah, I think we're going to look back on this and maybe wish we didn't live in interesting times by the time it's all said and done, Andy. Last question I got for you.
I already do, brother. I already do.
Last question I got for you is an easy one. People are interested in getting gold and silver from you. What are some specials that you guys are running they can take advantage of?
Yeah, right now we're running specials on brand new Buffalo rounds at $3.19 over, brand new Italian-made 10-ounce bars, silver at $2.99 over. But I really, really want to earn your listeners' business, Rob. And all they need to do now, I normally tell people to email me at info@𝙂𝙂Franklin, but I want them to email me directly at Andy@𝙂𝙂Franklin now, and I will personally reply to every one of them, send them a current inventory, and promise the listeners of Gold, Silver Pros my personal attention and the best price in America on whatever it is that they want to buy. That is my promise to you, and I will reiterate that in 32 years, we've never had a customer complaint, ever. And we are licensed and bonded, maybe one of the only major precious metals companies in America in what is a federally non-regulated industry. So while I believe we have the best reputation in the industry, we also have an accreditation and a very large surety bond backing all of our transactions, which is very unique to this industry. So on top of the safety and the reputation, I personally will give my own attention to your listeners and guarantee the very best price in the United States out of a distinct appreciation for you, your fantastic work, and our friendship. So for what it's worth, thank you. And I love being here, and I look forward to picking back up on video. Thanks for accommodating my audio request today, 2 weeks from now.
Yeah, no worries about that, Andy. Love to have you on. And I wanted to make a little bit of a personal recommendation here for 𝙂Franklin. I've dealt with a lot of companies in this space. And honestly, the last couple of years, I found out there are a lot of people that aren't not honest in this business, unfortunately, or they are honest, but they don't have the ability to execute as they want to. And so it does end up with some disappointment on the customer side. I've never had the experience with 𝙂Franklin. You guys have always been, on it. I am a customer, have been a customer, and I've never heard a complaint either from anybody that's used your service. And that's very rare in this business, Andy. I get complaints about other companies all the time. I've never gotten a single one from 𝙂Franklin. So that's a pretty good endorsement, because we do have a pretty large following. And they will let me know if there are ever any problems. And we certainly haven't had
And
any,
I hope they do, because in closing, Rob, you know what I tell all my brokers? I say, look, we all make mistakes, all of us. And to say we don't, you'd be lying through your teeth. But what defines a person or a business or a man or a woman is how they deal with a mistake. And we always accept accountability, and we make it right. And we make it to the point where I've always told my brokers, a mistake or a problem is nothing but an opportunity to strengthen a relationship. And I do mean that, as corny as it sounds, it's true. If you man up or woman up and take accountability, make it right the way that you would hope and want it to, people are more forgiving than you think. And immediately they become undefensive and appreciative. So anyways, for what it's worth, thank you for the kind words. I hope you have a wonderful weekend, Rob. It's always great to talk to you, buddy. And I'll look forward to picking up where we left off, hopefully sometime down the road soon. And thanks for having me. It's always a blast to talk with you.
Yeah, anytime, Andy, we'll have you on again. We're going to have you on every 2 weeks throughout the year to give us a report on precious metals and your view on the market. Appreciate having you on here now. Remember, everybody, to hit that like and subscribe button, hit the notification bell. Remember, you can also go to our website, goldsilverpros.com, if you want to access the deals that Andy has, or you can email him directly at Andy@𝙂Franklin. We'll talk to you next time. Hey, everybody, this is Robert. Thank you so much for watching that video content. I have a couple of quick announcements I'd like to share with you as we head out of this video. Also wanted to remind you, you can find us on goldsilverpros.com. We have a free newsletter. If you click here and enter your email address, we'll send that out every Monday to you, as well as we have special precious metals deals with leading bullion dealers here in the United States. If you click that button, you can go here and click on either 𝙂Franklin or ARC Silver and get the best deals in the business. Once again, thank you guys so much for joining us on the channel. Until next time, this has been Gold Silver Pros.